Hello everyone, this is Jay, and in today's video I'm going to be reviewing my portfolio to see what's undervalued, since I'm a DCA investor that every Friday makes a deposit, and then that deposit I distribute through my allocations and anything that is undervalued. But before we start, please don't forget to hit that like button and please subscribe so you can join me in this journey of growing the dividend portfolio. So let's go right into my portfolio, which is right here. Everything is on this spreadsheet that I created myself, and this is how I keep track of my portfolio. And as you guys can see right here at the very bottom right corner, I am down. I am still in the negative by $174. So if we go to the right, I am down 1.86%, which is not bad. Actually, a couple of weeks ago, I was down $800. So the market is definitely going up and up, and I can definitely see that it is by just keeping track of my portfolio. So right now, the market value of my portfolio is $9,370. That's including the cash that I have on hand right now, which is $145. I still have not moved that cash. I wanted to start a position in Visa, but it has a run up. It has been having a run up as of lately, so I kind of wanted to start at a cheaper price. But let me see. I'm gonna continue to see the market and see how what decision do I make. So right here, the first position is SCHD. I have 31.2 shares. And the share price is close to $72.35 yesterday, so it's a little bit under my cost. Right now I'm only down $2.88, so definitely has been having a run up right now. I'm only down less than 1%, so it looks like I'm gonna be going in the positive probably today. SCHD has been also having a run up as of lately, but SCHD, which is my top position right here, same as VYM, which is my position number 6, my 6th largest position. They are two that I buy on a weekly basis, no matter where the price is at. Right now, VYM, the price is 106.74, which is how it closed yesterday, as of yesterday, Thursday. I have 5.1 shares. So on these two ETFs, I make purchases every Friday, no matter what. I usually do $25 on SCHD and then $15 on VYM. But this week I might do a little bit more, a little bit extra on VYM also. All right, so let's go into the second position, which is Realty Income, and it is now 53.96. That's how it closed yesterday, Thursday. My cost per share is $58.20. I really hit this one, and I started purchasing a lot once it went down under 60. So I have been buying and buying and buying in this company. I know there was a lot of videos out there getting nervous and all that, but especially when it went down to the 40s, which I did not get a chance to catch up any shares around 40. I think it was only around 49 when I was able to catch up a couple times, but not in the lower, like mid 40s, when it went down to like $45, $46 a share. But definitely I took advantage of it in the lower 50s, high 40s. I definitely took advantage of that, and I was able to bring my costs down. I slowed down now, just because it is having a run up, and it is my second largest position. I want to grow other companies, other ticker symbols. So I'm probably going to make my regular $5 purchase to this one, just to continue to bring down my cost a little bit slowly. But it has been having a run up as of lately. Bank of America, it is my third largest position. It is at $30.49. I'm up $57 right now. This one I did a lump sum of $800. So I am holding as of now. J&J, Johnson & Johnson. This is definitely one stock that I encourage you to do your research. I do feel it is undervalued right now. The share price, it closed yesterday at $154.66. And my cost per share right now is $160. I'm in the negative by $27. This one right here has been on a dip as of lately. But it has also been having a run up, just like everything else in the market. So I opened it up right here in the Seeking Alpha tab, which is a website that I use to research stocks. I'm not affiliated with, but it's one of the ones that I use. You could use Seeking Alpha, Stock Analysis, Yahoo Finance. There's many websites out there. All right, so right here, Johnson & Johnson, ticker symbol JNJ. It closed off 154.66. Year to date is still down 13%. So that's why I'm still grabbing some shares. I grabbed some last week. I grabbed a little bit before the ex-dividend date, so I can get that nice juicy dividend. But in the last month, if you take a look at it right here, it is up almost 6%, 5.5%. So it definitely has been having a run up together with the market. It is closer to the 52-week low, which it was $144.95. The 52-week high, it is $181.04. The PE is 15.37, so you could catch it with a nice low PE, well, a lower PE right now. That dividend rate is $4.76 a share per year. That dividend yield 3.13%, which is what I'm really liking right now. That 3% yield definitely looking really good. Market cap $366 billion. So this is a company that I encourage you to do your research in it. To me, it's looking really good and undervalued right now. If you see that their total debt, it is $29 billion, but cash on hand $23 billion. So they definitely have a lot of cash on hand as a company. And then here it is, that dividend information right here, that yield 3.13%, as I've said before. That payout ratio 44%. So they definitely have a lot of space to grow that dividend at only 44% of that payout ratio. That 5-year growth CAGR 5.83%, which is not the greatest, it's not the highest, but it's also not the lowest. So I really like this growth right here. And the years of growth, 61 years of growing that dividend, growing and paying that dividend. So definitely looking really good. The ex-dividend date was on November 20th, and the payout date, it will be on December 5th, which it should be next week. I'm gonna be getting my dividend from Johnson & Johnson. I have the drip turned on, so it will definitely be dripping right back to it and buying me some more Johnson & Johnson. And then look at that dividend growth chart. If right here it continues to grow and grow at a 5% growth, an estimated 5% growth CAGR. 2019 they were paying $3.75 a share per year. 2020 $3.98. 2021 $4.19, 2022 $4.45, and then as of right now in 2023 looks like $4.76 a share per year. So definitely this company is looking really good. If I have more money, I'll definitely be buying some more, but it is going to be one of my largest purchases together with BYM and SCHD today for sure. I want to continue to bring my costs down also, which is one of my main focus right now. But definitely, I feel like this company is undervalued. Of course, it is not financial advice, guys. Do your research, but I really like J&J right now at these prices. My next one, it is Main Street Capital. It has been having a run up as of lately. I am up $50 right now. I am 15.6 per shares. The share price is $41.33. I always like to buy it every time it is under $40, and right now my cost per share is $38.11. Then Procter & Gamble, in that one I'm always in the positive in this one. It has been a little bit hard to continue to purchase and continue to bring up my cost per share, but I also cannot have that anchor effect. To be honest with you, I do like Procter & Gamble. I really like it. If I have some extra, an extra $5 or so, I'll definitely be buying some more. I'm a DCA investor. I'm just a regular guy, just like a lot of people out there, just a regular person, just like everyone out there. I have two jobs. I buy fractional shares. I don't have a ton of money, like millions of dollars, like other people might have in YouTube. I'm just showing you my portfolio, how a regular guy, just like me, can invest in the stock market and hopefully build wealth over time. Definitely be holding a lot of these companies long term, and we'll be making videos so all of you subscribers can see how my dividend grow and how a regular person just like me can grow a portfolio and build wealth. All right, so my next position in this KO, Coca-Cola, has been having a run up as of lately. Do you guys remember when Coca-Cola was around $51 a share? And look at it right now, $58.44. It closed yesterday. I'm going to be buying a little bit more Coca-Cola because it is still under 60. It's going to bring my cost up after I brought it down when it was when it was in the lower 50s. But I am up right now, $6.57. One of my favorite companies right there. And I do see that it has been having a run up as of lately. Look at it right here. That 52-week low was $51.55. So I definitely purchased around that price. I made a couple purchases. So I definitely wish it could go back down to that price, but the market has been going up as of lately. FXAIX, I do a weekly buy of $10. I'm really grateful for fractional shares, and I like how easy it is with the Fidelity account. I'm not affiliated with Fidelity, but it's the brokerage that I chose to use. And I really like it. So I put $10 every week on this one, on the S&P 500 index fund. I know a lot of people out there are probably like, why don't you make it your largest position? Well, almost my whole 401k, it is on a S&P 500 index fund, so I'm okay with that. Then my next one, it is Pfizer PFE, a position that I started in June. I am at 10.3 shares. I've been buying and buying and buying. PFE is one of the very first stocks that I always wanted to have, but I made the mistake and I invested in AGNC for the yield. So I definitely regret that, but I do like Pfizer right now at the price that it's at $30.47. So I'm building that position right there. So I'm putting like $10 every week, pretty much. A couple times I put like $20. And as you can see right here, is definitely growing. Then my next one is MPW, which I'm in the negative by a lot. I'm down $283. This is the position that has my portfolio down right now. More and more, as you can see right here in this column K. So I'm going to see if I continue to bring my costs down, but I'm probably going to put on other companies instead. Apple, ticker symbol AAPL, it is up right now. I am up $85. I don't think I'm going to be buying Apple at these prices right now, but it's definitely a company that I'm planning on holding very long term. I love their products. Definitely do your research in it. I really, really like it. Then I believe it is the number one position in the S&P 500 as a holding. But I really, really like it. I wish I would have bought more when it was in the 130s and 140s. It would have had my portfolio way up right now. But mistakes that we make and that we learn from, right? My next one, it is Starbucks. It is under $100. If you stay under $100, I might make a very, very small purchase that won't move the needle much, but over time it can. I have 2.5 shares right now. My cost per share is $88.68. I was buying when it was in the 80s, and then I kind of stopped because it had a run up into the hundreds, into over $100. So, but I'm in the positive right now by $27. Then Vici Properties, which is one of my favorite ones. I am continuing to buy $5 to $10 every week on Vici and continuing to grow that position. My cost per share right now is $30.05. Right now the share price is $29.89. So definitely buying some more Vici today. Ticker symbol is VICI. And then my last position right now is CanView, the spinoff from Johnson & Johnson. Ticker symbol is KVUE. It has been on a dip in the past month or two. Total shares I have, it is 9.5 shares. And my cost per share, it is $23.44. I started a position on IPO when it started. And my performance right now, I am down $28.49. So this one I am continuing to grow. And as you can see right here, this is my smallest position in my portfolio. But I am continuing to invest in it. I have $222 invested in it. And that's just been by buying fractional shares like $5 and $10. Pretty much. That's all you can do. I encourage you to do your research so you can grow some wealth. Definitely, that's what I like to do in this channel. Show my portfolio so you can see that a regular person just like me can grow a dividend portfolio. All right, so this is my portfolio right here. This is my estimated yearly dividends right here on column Q at the very bottom right here. So I should get an estimated $377 in the next 12 months if nothing changes, if each company just pays this dividend without growing it, without changing it or cutting it. I should get around that much, which is awesome. And that's my goal, to continue to grow that total right there of yearly dividends. All right, please let me know in the comment section, what are you planning on buying this week? And which day do you buy? Is there a day that is better to buy than Friday? I really like purchasing on Friday since I have a little bit of time. I have a short day at work, so I'm able to buy when I get out of work, or sometimes in the morning in my break time. I make all of my purchases. But that's when I usually do my purchases. I work 10 hours a day from Monday to Thursday, so it is a little bit difficult for me to keep track of the stock market. And that's why I make my purchases on Friday. And I also like the buy and hold strategy for that same reason, because I don't have much time to do research. I have a little bit of time in the afternoons, and that's pretty much it, or on the weekends when I can do my research. So I like to buy and hold good companies. I feel like most of my companies are very, very good companies for the buy and hold strategy. So I'll definitely be holding all of these companies for a very long term, unless anything changes and I want to move my money around to other holdings or anything like that. All right, please don't forget to hit that like button and subscribe so you can join me. I am right now at $9,300 in market value. I'm really trying to grow to $10,000 in market value and continue to grow. Definitely want to see this portfolio go very, very high. All right, everyone, I hope you enjoyed the video, and I'll see you on the next one on Sunday. Thank you. Disclaimer, I am not a financial advisor and this is for entertainment purposes only. Please do your due diligence and research before investing in the stock market. Thank you.